Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Thanks everybody, guys. Let's take a look in the gold market. In the gold, as you can see, effect of the gross domestic product release yesterday was not as strong as in the forex market. For the forex market, it was outstanding impact, as indeed 30% contraction of the gross domestic product in the United States is an outstanding level. Even in the Great Depression, this was small drop of the economy. So definitely, this kind of fundamental event, these statistics will not disappear without any consequences. It will make impact on a long time on the markets, and that just gives confidence that in the longer term perspective, gold continue its upward action. As we know, the next target is 2075 approximately, as we estimated in the monthly report, in the weekly report. Meantime, this was really very active week, and the market has reached significant levels, 1976. Breaking the previous top on the gold around 1920. Our suggestion, or better to say one of our scenarios that we said yesterday, if somehow numbers will be better, market could drop and close below 1920, give us the Russian risk stop in monthly chart has not been completed. Market probably will close today above this level, and it means that we'll start the preparation for the upward continuation. Meantime, gold market countries are overextended, as in any currency pairs on the forex market. That comes not from the currencies, this comes from the United States dollar weakness, and the gold is the same. So, and currently, in the current situation, the fundamental driving factors that we have, they overcome any common sense technical tools that we use. So overbought, resistances, some other tools that we use, they are just crushed by the outstanding impact of the fundamental factors. Sometimes this happens, and when this is happening, every trader has to make the decision, because very often happens that despite the technical tools show us overextension and worry about the retracement, market could move more and more for weeks before the real retracement will start. So every trader has to make the decision. My personal choice is I am taking into consideration the technicals. I could miss some action. I could miss some swings on the market. They sometimes are really significant. But that's just my choice. Do not go against the technical factors. So if I see that market is overbought and especially stands at some resistance, I better to miss the entry, miss the opportunity to make money, but I'm not will struggle with the technical barriers. Some traders trade with the confident with this and makes no some problems just taking the long positions when the market stands overextended and just following the trend. Sometimes it also happens. So, but that is very personal, and you have to make your choice by yourself, because this relates to some psychological moments in your trading style. So speaking on the technical picture, as I said, markets strongly overbought, and reaction on the gross domestic product on the gold was not as strong as in the euro. So here we see that even the bearish grabber is forming. Dynamic pressure that was forming here, as you can see, market stands flat here, keeping bearish trend but forming higher lows, is worked out because market has created the new top. So this top has been taken out, and theoretically the very bullish dynamic pressure has reached its minimal target. So keep watching for this grabber. As we said yesterday, if you feel comfortable the gambling a bit, you could try to take the short position even before the gross domestic product will be released. Well, in fact, indeed some pullback here has happened, and release of the gross domestic product was not very harmful to the gold. So market just has returned back up to the top. On the hourly chart, we see also some very short bearish signs. It's kind of the triangle is forming, and here we have the minor Russian range of this area. So this is not yet, of course, the clear bearish pattern. We do not have any clear bearish patterns yet, But it could tell you that today maybe market will show some gradual pullback. Because it's Friday, it really was big, significant week. Action on the gold was really very strong, and significant swing has been completed. Investors could try to grab some profit and book some profit today. So that's our view on the gold. And in perspective, we need to keep an eye on whether it will be some response on the overbought condition on the monthly and the weekly chart. If not, then the market is going to 2075 area. And maybe some response will come from the 2075. So that's just two moments that could happen here.